Now, we'll move on to a preview of the week, beginning on July 11th and ending in July 15th. So the next week, of course, dominated as always by Brexit, because it's a huge event that has further implications. We haven't seen the end of this, and that'll probably domain, and of course the non-farm payroll fallout from Friday will be felt on Monday. All right. But things get warm up with the jobs report on Tuesday. It's another indication for the jobs market, the one eyed by the Fed. This time it's a bit lagging. It's for the month of May. And for the month of May, we expect it was the terrible jobs report. Let's see if the jobs fall in line with this report or they provide some comfort. Okay. Wednesday, we have the Chinese trade balance, and which is important, of course, to see the level of exports and imports, the level of activity around China, the world's second largest economy, critical for the Australian dollar, but also for the global economy in large. The Bank of Canada's rate decision is also on Wednesday. No change in rates is expected. Things have become a bit more stable in Canada. Okay, but you never know. Maybe they'll preempt some bad move. On Thursday, things become very busy for those who are trading the Aussie at night. There's the Australian jobs report. More importantly, UK rate decision Thursday next week. For a change, it's going to be a big event. It's unclear what the Bank of England will do. On one hand, they have many expect them to cut rates because that's the sort of they haven't changed rates since 2009, and this could be a chance now things have become worse and they can cut rates, but it stands at only 0.5%. They might not be keen on doing that. Their other option is QE. Also, QE hasn't changed since 2012, nearly 4 years, or exactly 4 years, the middle of 2012. It stands at 375 billion pounds. This is their chance to enlarge it by 50 billion pounds, for example. That means they would buy more bonds, but bonds are already at low levels. I don't know how much it'll help, but it'll help in liquidity and, of course, weaken the pound, which could help exporters. The pound, in any case, is already quite low. It also depends on what they say towards their next decision, because in August they have the inflation report in the UK. So it could mean not only their actions, but also hints for the future are key. Okay, big decision for a change in the UK, not only the meeting minutes, but also the actual decisions that will be made. We also have PPI and jobless claims on Thursday in the United States. But the bigger events in the US come on Friday. Before the US, we have Chinese GDP. China, double whammy. Next week, they release their gross domestic product figures very early after the quarter ends. And it's the first and final release. We're expecting a slowdown, another read of under 7% year over year. And let's see how much they slow down. Nobody's going to believe them anyway. It doesn't mean that it doesn't move markets. Okay. And then we have a big focus on the US consumer. Retail sales, this is a figure for the month of June. They're expected to be okay. In recent months, this figure has improved. Consumption has improved. Inflation figures, relatively stable, probably be overshadowed by retail sales and consumer confidence. Another look at the consumer this time through the level of confidence. Let's see if we have any kind of impact of Brexit crossing overseas. I'm not so sure. Consumer confidence has been relatively upbeat of late, improving at least. Let's see if this continues or not. The Fed did talk about personal consumption as being a positive for the US economy. Okay, so that concludes our preview